500 million ounces. Gone. Vanished. In just 18 months. While you were busy watching the news talk about interest rates, China quietly executed the single largest physical silver transfer in modern history. And almost nobody's talking about it. That's nearly $16 billion in real physical silver, drained from Western vaults like COMEX and the LBMA, and shipped directly into Shanghai warehouses. This wasn't an accident. It was deliberate. It was systematic. And here's the part that should really concern you. It's never coming back. In the next 10 minutes, I'm going to show you exactly where this silver went, who helped China drain the vaults, and what this means for the price of silver by the end of this month. By the end of this video, you will finally understand what the big banks and the financial media are hiding from you. I'll tell you exactly where silver is heading by June, a number that will absolutely shock most people, but it won't surprise you if you've been paying attention. Money Mind Hub Pro here. It's Thursday, February 12th, 2026. The markets are open, and what just happened in the last 72 hours changes everything we thought we knew about the silver market. If you want the real story, the truth that the mainstream financial media refuses to touch, hit that subscribe button right now. Now, let me show you the crime scene. Look at these numbers. In January 2024, COMEX held 152 million registered ounces of silver. That's real, physical, deliverable silver. Fast forward to today, just 32 million ounces. That's a staggering 79% drain in only 18 months. The data doesn't lie. But here's where the story gets really interesting. This silver didn't just evaporate. It wasn't melted down for a new project. It moved. And every single ounce that disappeared from COMEX showed up somewhere else. Shanghai. The Shanghai Futures Exchange added 300 million ounces in the exact same 18-month period. As Western vaults bled out, Eastern vaults filled up. It's like watching your neighbor drain your swimming pool to fill their own right across the street. Do you believe in coincidences on this scale? Because I don't. I believe in coordination. And if you need more proof, look at the Shanghai premium right now. Physical silver in Shanghai is trading at a $12 per ounce premium above the COMEX paper price. In a normal functioning market, arbitrage traders would close that gap in a matter of hours. They'd buy the cheaper Western metal and sell it for a profit in the East. But the gap isn't closing, it's actually widening. Do you know why? Because you can't arbitrage metal that doesn't exist. The trading bots are trying to buy COMEX silver, but when they go to take delivery, the vault is effectively empty. It's like a security camera showing a looped video of full shelves, while the real vault is being emptied out the back door. But wait until you see who's holding that back door open. Here's what's really happening. The big banks, the major players in the market, they're not incompetent. They're enabling it. They run the paper market. They use unlimited futures contracts to suppress the price, keeping it artificially low. And while they do that, they are quietly facilitating the physical transfer of the real metal to the East. Let's connect the dots. The major bullion banks' own silver holdings have dropped by 80% in the last 18 months. And what else happened in those same 18 months? China's silver imports hit all-time record highs, over 12,000 metric tons in 2024 alone. That's not just regular demand. That's strategic accumulation. That's a country preparing for a major economic repositioning on the world stage. Think about it. China needs 150 million ounces of silver per year just for its solar panel production. That's a huge number on its own. Now add in their demand for electric vehicles, military technology, and 5G infrastructure. The reality is they are consuming silver faster than the entire world can mine it. And instead of paying fair market prices for this critical metal, they get to benefit from the suppressed paper prices set in the West, while they quietly accumulate the entire physical supply. This is not a free market. This is a massive wealth transfer happening in broad daylight. The vault door is wide open, and the trucks are just driving away. But it gets even worse. Right now, there are over 150,000 open futures contracts on the COMEX. Each one of those contracts represents a claim on 5,000 ounces of silver. Do the math. That's 750 million ounces of paper claims, chasing only 32 million ounces of actual registered physical metal. That's a ratio of 23 to 1. 23 paper claims for every single real ounce of silver in the vault. When the music stops, 22 out of 23 people standing in line will not get a chair. They'll get a cash settlement based on a fake, manipulated price. And the real metal? It will be sitting securely in Shanghai. Let me be crystal clear. Silver trading at $32 today is a paper fantasy completely disconnected from physical reality. When the delivery pressure finally breaks the system, and it will, the paper price and the physical price are going to diverge dramatically. Based on this data, I'm looking at $50 silver by June and $150 by the end of the year. That's not hype. That's just the math of a supply crisis, colliding head-on with a delivery crisis. When the markets open on Monday, this divergence is going to accelerate. Let me show you exactly how this plays out in real life, because we've seen this before. History doesn't repeat, but it often rhymes. Back in 1979, The Hunt brothers accumulated 200 million ounces of silver, cornering about a third of the world's available supply at the time. The price of silver went from $6 to $50 in just 12 months. That's an 8x move that shocked the entire financial world. Today, China has accumulated more than double that amount, over 500 million ounces. And here's the critical difference. When COMEX changed the rules on the Hunt brothers, they were forced to sell their position. But China doesn't answer to COMEX. China doesn't care about margin calls or rule changes. They're not speculating for a quick profit. They are stockpiling a strategic, irreplaceable resource for their future. And for all the stackers out there who bought physical silver at $20 and held on through every manipulation, every price smash, every talking head on TV telling you that you were a fool, this is your vindication. You were right all along. So here's the final verdict. 500 million ounces of physical silver have left Western vaults and moved to China. They are never coming back. The COMEX now has only 32 million registered ounces left, which is only enough to cover about 4% of the paper claims against it. The Shanghai premium is $12 and growing. The big banks have sold off 80% of their own holdings. The math simply does not work. The pressure is building. The question is no longer whether silver will hit 150. The real question is whether you will be holding physical metal in your own possession when it does. The clock is ticking. The window of opportunity is closing. Here's what you need to consider. If you own paper silver, like an ETF, futures contracts, or pool account, you should seriously consider converting it to physical metal before the next delivery month begins. If you already own physical silver, hold it. Do not sell into this initial strength. Do not let them shake you out of your position. This is the big move you have been waiting for, and if you don't own any silver yet, that window is closing very, very fast. What's available for $32 today will not be available at this price next month. Premiums are rising and physical supply is tightening by the day. Don't believe the mainstream headlines you're about to see. Talking about bubbles and speculation, the fundamentals haven't just changed, they've gotten exponentially stronger. This is Money Mind Hub Pro. Remember, if you can't hold it, you don't own it. Drop a comment below and tell me, are you adding to your physical stack this week? Subscribe if you want the truth before Wall Street is forced to admit it. The squeeze is real. The drain is real. And this opportunity will not last forever. I'll see you when the markets open.
Quick disclaimer. This video is for educational purposes only and is not financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Now let's dive in.